Hi, I'm Sean Kelleher, Associate Wealth Advisor here at Towerpoint. Lately, you may have seen some headlines and conversations popping up around a new idea in the housing market: 50-year mortgages. With home prices still elevated and affordability continuing to challenge buyers, especially first-time buyers, longer mortgage terms are being discussed as a possible way to lower monthly payments. But while a longer mortgage might sound appealing at first, it naturally raises some important questions. With home prices still elevated and affordability continuing to challenge buyers, especially first-time buyers, longer mortgage terms are being discussed as a possible way to lower monthly payments. But while a longer mortgage might sound appealing at first, it naturally raises some important questions. Does extending a loan to 50 years truly make home ownership more affordable over time? What does it mean for the total amount of interest paid? And how could a decision like this impact your broader financial plan, your retirement timeline, and your ability to build long-term wealth? Because of all these questions, our president, Joseph Eschleman, recently addressed this topic and many of these concerns in a feature on ABC10's Dollars Sense, where he shared perspective on what these proposals could mean for buyers and homeowners. Let's take a look at that interview.
You're going to be paying a heck of a lot more interest on a 50-year mortgage than you are in a more traditional product like a 15 or a 30-year.
A 50-year mortgage basically extends the overall length or term of a mortgage from 30 years all the way to 50. On the one hand, Joseph Eschleman, the president and founder of Towerpoint Wealth, says it does afford a borrower the opportunity to lower their monthly payment because the mortgage is longer.
From the standpoint of a first-time home buyer, having an opportunity to gain entry to purchase a home could be viewed as a good deal.
On the other hand, with a 50-year mortgage, you could end up paying more on interest.
Considering the current state of the economy and the fact that the new national median age for first-time home buyers has gone up to a record high of 40 years old, which just 4 years ago was 33 years old, this according to the National Association of Realtors, what advice do you have for first-time home buyers?
Don't get caught up with this shiny object syndrome, so to speak. The difficulty becomes how long are you going to have this mortgage as part of your overall financial situation?
Eschleman says saving enough money for a down payment on a home likely involves trade-offs in your spending habits and financial discipline, which can be hard when people are already struggling to pay bills.
We know part of the American dream is that generational wealth, right? Talk to me about the impact a 50-year mortgage could have on folks' ability to pass on that American dream, that generational wealth.
I think that the dream is still alive, perhaps a bit harder to reach today. People are, tending to have to stretch more and consider more innovative products like, 50-year mortgage. Having the ability to ease or to have a lower monthly payment does afford people the ability to hopefully build some equity in their home, albeit at a longer period of time.
As you heard, decisions like these aren't just about reducing a monthly payment. They can have lasting effects on your entire financial picture. At Towerpoint, we believe in looking beyond headline solutions, understanding the long-term implications of financial decisions, and making sure your housing choices are thoughtfully coordinated with your broader wealth and retirement goals, always based on your unique situation. If you'd like to continue this conversation or have questions about how today's housing market fits into your overall financial plan, click the link below to schedule a 20-minute Ask Anything conversation with one of our advisors here at Towerpoint. We're here to help you move forward with clarity and confidence.